yet.
I'm not sure we are done. Yeah, I may not get there because we had a couple.
Oh, really?
People
Oh,
already.
well, seats will have the roll. Seats will have the roll. I believe we're going to find ourselves one short of a quorum, but we can go ahead and get started and come back to our minutes approval later in the meeting. So, Madam Clerk, if you could call the roll.
Senator Carpenter, Senator Deneen, Senator Higdon, Senator Neal, Senator Smith, Representative Kleins,
Here.
Representative Decker, Representative Holloway, Representative McPherson, Representative Watkins, Co-Chair Mills,
I'm here.
Co-Chair Witten.
Here.
Well, thank you to all the members that are here, and hopefully we'll have another member come in before anybody has to leave. But this is our final meeting as far as taking in information regarding housing, and then we'll have our November meeting where we'll talk about kind of findings and how to what we will report back to the LRC. So we have four very good presenters here today. And first is going to be Lexington's Housing Affordability Partnership. So all the folks that are involved in that, if you want to come to the table, and if you have supporting cast that want to stay in their seats, that's fine too. So, Ms. Johnson, if you can introduce yourself and others at the table, that'd be great. The floor is yours.
Thank you, Chairman Mills. Would you be okay if we do this in two waves? We start out and then our third group of presenters come up. Just one moment, I'll pull up our presentation. Okay, I think we're ready to go. Chairman Mills, again, my name is Andy Johnson, and I am the Chief Policy Officer with Commerce Lexington. We are the Chamber of Commerce in Lexington, serving not only Fayette County, but our 9-county region. So we appreciate the opportunity to bring our community group before the committee to provide an update on this is on rotation, on the transient, what we call the transient housing project, but it is the Lexington Affordable Housing Partnership. And to some folks, this may be a new concept. So we wanted to provide just a little bit of background before we get into the project update. We are very appreciative of the General Assembly allocating $10 million last budget cycle to this project. And one thing that we wanted to point out is the Kentucky Housing Corporation did do a housing supply study. And for Fayette County, our current gap analysis is over 22,000 units, both for rental and home ownership. So the housing supply challenge is real. Commerce Lexington served as the convener of a group of housing developers and our bankers to talk about Lexington's unique challenges. And something that we talked through over the series of several months a couple years ago is what could we do as a business community to help with this unique challenge? And so when we talked through the issue, what we found is that the lack of available land, the high purchase to buy land in Lexington, and then for our affordable housing developers, having the capital to access that land was a key challenge. And then, of course, just the affordability challenge for Fayette County overall. And something that we've talked about is just the fact that our median home prices have increased over 100% over the last 10 years, whereas the wages that people are making in the community have only increased 30%. So as a response to that, we had 5 local banks and 5 local housing developers come together.
We're going to get you some tech support here.
Sorry, I'm trying to keep up with it. Come together to really come up with local solutions, in addition to partnering with our local government and with Transylvania University. So the banks came together to create a capital fund, $3 million in startup capital, to be able to purchase land and hold it. Sorry, Is that pause button? Is it the pause button? Yeah. Right there. Oh, gosh. Does that work? Okay, we think it's paused, so I apologize for that. There's always feels like there's technical difficulty. So there were 5 local banks that came together to put together what we call a capital investment fund to try. They were going to purchase land and hold it in partnership with affordable housing developers to try to address that affordability challenge with holding the land. Those properties would be 80% or less of area median income and be deed restricted. The banks would hold that with a no interest loan to help bring down the cost of those projects. And the positive win for the banks, in addition just to being a good community stakeholder, was their eligibility for community reinvestment credits through that process. And so the first pilot project where we were able to was really a unicorn project. Transylvania University was looking to sell their baseball field at the time that this community group was coming together. It was really just a perfect opportunity, and they were willing to be community partners in the sale of this property for affordable housing. So there are 5 local developers, local housing developers that are also participating in this partnership. You can see their names listed: AU Associates, Winterwood, Habitat for Humanity, the Urban League of Lexington, and the Lexington Housing Authority that are the participating affordable housing developers in working on this project together. It's over 12.5 acres. It would be a difficult project for any of them to do alone, but together, this is something that is really unique, that they can all have a piece of that and help with our housing need. And so with that, I'm going to turn this over to Ed Holmes, who has been engaged with helping with the design of this project and working on coming up with the details to go more in depth. And then after Ed, we'll have some of our developers talk about the financing.
Thank you, Andy. Senators, I want to talk to you about the project and give you a general overview. Like I said, I came on board to work with the developers and the lenders and coming up with an overall site design of the site. The current site plan that you see before you includes a total of about 242 units. And of that breakdown of those 242 units, we were able to design 29 detached, the blue representation on the site plan, 32 townhouse. All those are single family. The townhouses are the brown, and the single family are the blue. And then the teal or purple units are what we're calling the garden style apartments. That was going to consist of 84 garden style, and then the blue and the lower southern part is 96 units of senior housing. We try to design this keeping in mind the overall design standards that we want to achieve with this project. One, making it a very walkable, sustainable community, and creating a lifestyle that would enable it to integrate well within the surrounding neighborhood. And doing that, we had neighborhood and community engagement and outreach. The process has taken a while to get to this point, but we feel we've been able to reach a consensus of what the neighborhood would be best for the neighborhood and the city. The typical regulatory process has been time-consuming because we had to get a zone change, and then from the zone change, we went to the council approval, and all of that in conjunction with the development plan process. So anyone that's gone through a development plan zone change process in terms of development, it takes a little longer than we want, but overall, you can see the timeline. Our site design and community engagement is taken from May to August of this year. And representative, well, I'm going back and forth. The zone, we talked about the zone change. And then if you can go to some concepts of the housing units, just to give you an idea of the housing units. Lot sizes are about 3,000 square feet, includes garages, and it's some green space that's incorporated into it. So those are the single family units. We have townhouses, and then some one-story units also that will complement the project. It represents the neighborhood and the area. So we think once this is fully developed, it'll be representative of the neighborhood going to the financing.
So we're going to leave the table and have two of our affordable housing developers, along with Luther Deaton with Central Bank, come up and talk more specifically about the project financing.
Okay, we'll hold all our questions till the end for everybody. If y'all could give your name for the record, that'd be great.
Hi, I'm Johan Graham with AU Associates out of Lexington, Kentucky.
Okay.
Hi, good afternoon. Mike Hines with Winterwood out of Lexington.
Okay, your mic was not on. If you might want to say that, sorry.
Push the button for on.
It should be green.
There we go. All right. Mike Hines with Winterwood Incorporated, also out of Lexington.
Perfect. Thank you.
Luther Deaton with Central Bank in Lexington, Kentucky.
Yes, sir, Mr. Deaton. Welcome to all of you all. The floor is yours.
You go ahead and start.
All right. Well, thank you again for the opportunity to present to the committee. We wanted to provide a brief update in the financing. So Ed Holmes, who preceded us, talked a little bit about the planning process. That process is pretty much complete at this point, so now we're beginning to move forward. To my understanding, the city, who was the actual recipient from the state, has finalized effectively the terms of their agreements and their processes. So we will begin in a short order being able to actually move dirt and commence work on the infrastructure component of the project. One of the things that we are using, and you'll note that we have mixed income housing, or mixed styles of housing. So we have, not only do we have single family home ownership, we also have affordable family housing and affordable senior housing. And so as the 5 organizations have worked together over the course of this project, we've been able to identify discrete aspects of the project. We are working together, but we are taking lead on certain aspects of the project. So once we have the infrastructure in place, my organization, Winterwood, we will take the lead on the senior housing. Johan's organization, AU Associates, will take the lead on the multifamily housing, the family housing, and then our other 3 partners will be taking leads on the homeownership component of the site. Johan, is there anything you'd like to add?
No, I think this slide kind of shows our plan for the project. So the $10 million of state financing that's flowing through the city and our nonprofit partners for the infrastructure is they're leveraging approximately $64 million in other financing through tax credit equity from the sale of the low-income housing tax credits, permanent financing for both the homeownership sites and the permanent sites through market rate loans. The city of Lexington has pledged an additional amount of money to the project for the multifamily and single family sites, as well as Kentucky Housing Corporation. So obviously Habitat for Humanity and our nonprofit partners also rose donation funds for their project as well. But the current estimate for that and the project's is about $64 million in other financing that's coming to this project. The 2 multifamily projects, both senior and family, their bond applications for financing are due to Kentucky Housing Corporation tomorrow. So that's a big milestone for those 2 projects. As Mike mentioned, the MOU with the state is signed, and we're working on passing that money through the nonprofit partners so we can expedite transfer of the land from the banking partnerships so that money can be revolved again in the spring to new projects. So, and we'll start turning dirt at that point too with the infrastructure project. So we expect dirt on the infrastructure to be turned coming out of winter and then going vertical with all phases of the project in the fall of 2026 in terms of timeline.
If I may, could I
Sure.
back that up? The partner organizations,
Sure.
if you don't mind, particularly the financial. One point that I think is relevant for the committee, and do have to really thank Mr. Deaton and other financial institutions. Actually, one more, if you don't mind, Johan, maybe 2 more. It's the one with all the bank logos. But these 5 financial institutions who stepped up, this isn't just us working together to procure a loan from a bank to build housing. They really led the charge. They led the initiative. They put the capital at risk in advance of us even coming up with a concept or a plan. They stepped forward in this instance. Now, the state has stepped forward as well, and that is greatly appreciated, but it all goes back to that inception point of 5 financial institutions who are, have shareholders to report to, frankly, stepping forward to take risk to make something happen. And so with that, Luther, I don't mean to, but if you'd like to say something, please do.
Thank you all so much, and on behalf of all the banks, Central Bank, Stockyards, Republic, Community Trust, and Traditional, thank you so much. Without your help, this would have been a struggle. We could have made it work, but not as good as it's go to work. So we really appreciate the partnerships we have with you all and with our developers. It's going to be unbelievable, and it's going to work. And I hope and pray that we can take this throughout the state. Truthfully, I'm meeting with other people in our region to explain how we've done it here and how do we take this to the other parts of the region and the state. Being where I'm from, up in Breathitt County, it's hard to find a house in the rural areas. And I hope and pray that we can take this throughout the whole state with the Kentucky Bankers Association, and we will all work together, all banks work together, along with you all, and we will come up with a great product. And I really let you know that we really appreciate what you've done, and thank you so much.
From the nonprofit developers and the for-profit developers perspective, this 12.5 acre site and the $3 million purchase price of the site makes it difficult for any single one of us affordable housing developers to take on this challenge alone. So brainstorming ideas on how we would tackle a larger piece of land, the bank consortium led by Mr. Deaton, when they purchased the property, they're holding it interest-free for us. So that allowed us the time to do the community engagement, to seek additional financing opportunities, the $10 million, the $64 million. This is a 2 to 3 year process to break ground and go vertical. Ordinarily, holding land involves interest costs that none of us could do it for that long. So it really allows us to brainstorm to come up with the best possible use for this site and to maximize the number of housing units on this site and to provide the most bang for the buck in terms of the number of units we're doing without the financial pressure of having to deliver it within like 1 month of buying the property, which is usually what we have to do. Like when we buy property, we have to move really quickly. And that often means we have to do smaller projects that are shovel ready right away. So this really allowed us the opportunity to hold this land, come up with this bigger concept, produce more units, and a more transformational project for this neighborhood and for the city in terms of quantity of units and design and types of units in terms of mixed family, senior, home ownership, and rental opportunities. And it wouldn't have been possible without the bank stepping forward to buy the land interest-free and to hold it at 80% or below AMI with a deed restriction on the site, which allows them to claim that Community Reinvestment Act credit while we're working on the project.
And Transylvania University gets a lot of credit because they had a lot of people look at this baseball field to buy it for other development. And we went to them, and they give us a good deal on it. And I want to thank them publicly for really helping us.
In terms of policy, I'll do quickly a policy recommendations moving forward. So that's our... do 2 things at once here. Talk and move the cursor. So we want to talk a little bit about maybe what moving forward, lessons we can take from this, lessons learned, and what things we can do like this in the future. So we're fully in support of a statewide housing fund of $20 million, kind of proposed by the Kentucky Bankers Association and championed by this group to provide similar type of financing across the state to do transformational projects like this, involving a revolving loan fund, potentially state housing tax credits, which all of our neighbors have that we do not have. We are also in support of a residential infrastructure fund that would support both affordable and market rate developments that provide those initial costs that are catalysts for projects like this, market rate and affordable. So, and then we want to stress that we want to avoid any regulatory burdens that cause both affordable and multifamily builders and market rate builders any more costs in this market where we have still high interest rates and higher construction costs than we've had in the past. So those are our policy recommendations. I think some of those have come out of this committee as well. So we just wanted to support those initiatives.
Yeah. Well, thank you so much for your policy recommendations. Like you said, many of those are things that we've been kind of marinating on right now. I had one quick question about your presentation. So your community, the community agencies that are going to help you fill these houses, so once that process starts, what are you envisioning the timeline of filling all 242 units? And is that pipeline kind of ready? Do these organizations like have 50 families deep that need homes that can go right into them? How's that working?
We can kind of split this into two different factions. So the rental housing, which is 180 of the units, I believe, from the previous slide, we can absorb as quickly as we can the rental market in Lexington, 12 to 15 units a month with staff on site to lease these up. So we think within 6 months of completion, all the rental units will be filled. That's based on previous projects, past knowledge. We could do more than that with more staff. There's really we're so deep in the hole in terms of number of rental units in Fayette County, pretty much across the state from the other things that you've seen, that rental housing, we're going to lease them as fast as possible. Yep, all income adjusted rental. So all the units in the property will be deed restricted to below 80%. The rental is below 60%. So for a family of one in Fayette County, that's about $44,000 for a family of one, and then it increases for household members above that. The for sale housing, Habitat has their own model of qualifying their tenants and moving them in. So they'll probably be staged over time as the housing is complete, because they won't all come online the same day, but they'll start signing families up, as will the Housing Authority and the Urban League, to go through their programming to qualify for those housing. So if we can keep sales prices at a reasonable level, there's no shortage of people who qualify. It's just securing those mortgages and the capital to finish the housing so we can bring them online. So I anticipate those houses will come online over the course of 12 to 36 months, so they won't be all one day based on their building model, but no shortage of applicants or income-based individuals in Fayette County that are in need of housing, or anywhere else in the state, pretty much, for that matter.
And then once the project is mature, what are you expecting the return of capital back into the revolving fund to do another project? What are you expecting to return back? 100% of it, or less?
Yes. So on day one, so as soon as we've entitled the property and we close on the MOU with our nonprofit partners, and the city's closed, first thing we'll do is buy the land back from the bank consortium. So that $3 million will go back into the fund, hopefully before the first of this year.
Okay.
So that will be the first thing that happens. And then those funds will go back into the revolving fund. And the goal is that we can do other transformational projects, maybe not as big as this, but maybe different, smaller projects to do the same thing. But that's the plan, is to revolve this money back into the banking fund before the end of the year, so we can start thinking about how to redeploy it again for the next project.
Is there a limit that you got to recoup before you start spending again on a new project? Have y'all said that?
We have not talked about that, but it basically it's all coming back. So the full $3 million will go back to the revolving loan. I think that's the expectation every time, is the entire principal will be returned, so that can be revolved. Now, it can be revolved in smaller pieces after that, so it can go out $1 million at a time, $500,000 at a time. But the goal is, what will happen is all $3 million of the initial investment will be returned to the revolving fund.
Representative Witten has the question.
Thank you, Chair. I appreciate this. This is exciting. I'm a graduate of Transylvania University. It was a long time ago, so the campus looks nothing like it did in the early 90s, and I won't give you the year, but it's exciting to see this type of revitalization in that neighborhood, because I think it's gonna be great. Looking at your state policy recommendations, and I thank you for offering those. As far as regulatory and process reforms, do you have anything specific that you've encountered that was a challenge for you that we can take on, or is there anything in particular that you noticed that was a hindrance to you guys?
Well, there are others in the room that are certainly have greater expertise in this capacity than I do. I will admit that, and certainly there's individuals here with the BIA that could speak to that probably very specifically. But at a broad stroke, there are increasing requirements coming through, federal recommendations that the state is adopting that are driving costs into the construction of housing just broadly. And of course, that impacts us as well. We're not immune to that. So as those regulations get enforced, begin to come in line, we will anticipate higher costs in the future to build the same housing that we would have built last year. Otherwise would be the same. So there's some specifics to that I'm sure, unless somebody would like to.
Well, I think one thing I want to bring up is the House bill from last summer that passed regarding planning and zoning reforms, the development plan process. I think those need to continue to be looked at to expedite projects, both affordable and market rate at the local level, to help avoid NIMBYism and to streamline the time it takes to get through the planning and zoning process, and especially some of the larger cities. So I think looking at that bill, monitoring how the progress is going and continuing to tweak and encourage cities to move development plans through the process quicker that meet the plans and objectives of the comprehensive plan is always something that we're interested in looking at from a regulatory perspective. And I think the legislature addressed that last cycle, maybe the 2024 cycle, and we're just seeing that roll out this summer to figure out how it may go. But I encourage you to keep an eye on that to see if you think it's producing the impact that you expect it to. Because I think that's one of the biggest policy planning and zoning things we've done in the last 15 years at a legislative level.
And I just add too that everybody in the audience and everybody that's listening, any specific issues like that you can point out to us, it would be very helpful for us. I mean, specific, we hear broad, and that's why Representative Whitten's asking that question. We hear broad numbers like, regulation adds 20% to the building cost, but it's hard to bring that down to a nutshell as how do we lower that cost and what do we need to do. So we've been trying to peck away at it, but we still need help. So let's see, Representative Watkins.
Thank you, Mr. Chair. Thank you all for the presentation today. Really excited about it. I want to get some technical clarity on it, if I may. Did you say this entire project is deed restricted?
Yes. Correct.
So the market rate housing is deed restricted at 80% AMI?
80% AMI.
And the rentals are 60?
Correct.
Okay, awesome. Did you also, can you tell me a little, I'm sorry, Mr. Chairman, I have a couple more. Thanks. Who's managing the post-construction management of the rentals? Is that a local?
You go ahead.
Well, we'll each be, so what we talked about, working together, but also taking on particular aspects of the project. So Johan's organization, AU Associates, will manage the family housing, and my organization, Winterwood, will manage the senior housing.
Yeah, we're both vertically integrated, so we have our own property management companies in-house. So we think that best supports our own housing and represents local interests the best.
Thank you very much. Thank you, Mr. Chair.
All righty. Any other questions from the panel? I think this is very interesting, and want to congratulate you on what looks like a successful project, and we'll hopefully be spreading this across the state. So,
thank you very much for the time.
Yes, sir. Thank you. Next is Northern Kentucky. Come on up. We got 4 chairs or 3 chairs. Welcome to our committee, and we have about similar time limit. If we can do this in about 25 or 30 minutes, that'd be awesome.
Let me see if I can avoid technology issues here.
Yeah. I know it. It is.
We just may roll with it this way. How's that?
That'd be fine.
From beginning on the left.
There we go. Thank
All right.
you.
If you can turn your mic on and introduce yourselves real quick, and then y'all can take off.
Tammy Wilson, Vice President of Government Relations and Business Advocacy for the Northern Kentucky Chamber of Commerce.
Travis Geisigum, Director of Research and Underwriting with the Catalytic Fund. Brian Miller, Executive Vice President of the Building Industry Association of Northern Kentucky.
All righty. Well, good afternoon, Chair Mills, Chair Winton, and members of the task force. Thank you so much for the opportunity to speak with you today about our Northern Kentucky Housing Blueprint. And we especially want to thank you for your continued focus on the Kentucky housing crisis. I am here on behalf of the Northern Kentucky Chamber of Commerce, a member-driven organization representing about 1,755 member businesses across primarily Boone, Kenton, and Campbell counties, but we also encompass several other counties within the Northern Kentucky Area Development District region. From small family-owned shops to some of our region's largest employers, our members repeatedly tell us about housing availability and how it directly affects their ability to attract and retain workers, which is why this issue is so critically important to us. Before we begin, I'd like to provide a brief overview of Northern Kentucky's housing work, how the Home for All report led to our regional housing blueprint we are discussing today. And then my colleagues from the Catalytic Fund and the Building Industry Association of Northern Kentucky will take a closer look at points 1 and 4 of our, wow, is this rotating too? That's not what I was expecting to see. So we're back up here. We'll just talk about a little bit about, feel free. Okay. Between every slide, I have to hit that? Okay. Okay. We'll do our best. I think I'll just go with that. Yeah, thank you. Before we begin, I'd like to again give you a brief overview of the Northern Kentucky housing work and how the Home for All report led to our regional housing blueprint that we're talking about today. And then again, later, these two gentlemen will emphasize points 1 and 4 of our housing blueprint. The Home for All, Northern Kentucky's Housing Strategies report was released in January of this year, and it brought together more than 90 community leaders who developed 50 strategies to increase housing options. Led by our Northern Kentucky Area Development District, Brighton Center and Brighton Properties, which are nonprofits in our region, it provided a strong foundation for regional collaboration. From there, the Northern Kentucky Chamber distilled those 50 strategies into 4 business-focused priorities, creating our Northern Kentucky Housing Blueprint. The purpose of the Housing Blueprint is to help align the private sector, local governments, and community partners around practical, actionable steps that grow housing and strengthen our economy. The Blueprint priorities include, let me switch slides there. Whoop. There we go. The Blueprint priorities include a regional housing fund. Over 5 years, a $25 million fund could help construct 1,000 new income-aligned homes, repair 50 existing homes, and provide down payment assistance to 275 first-time homebuyers. We've identified the Catalytic Fund as the most logical entity to lead this work. They have deep expertise in financing and supporting housing and community development projects throughout Northern Kentucky. We also are looking at employer-assisted housing program, where employers could help their workers live closer to their jobs and manage housing expenses. A one-time $5 million investment from a large employer or a cluster of employers could help provide homes for roughly 125 families. A good example of that is the University of Kentucky. They are already piloting a similar model, offering forgivable loans and homeownership education to employees. It's practical, repeatable approach that could easily extend beyond our region. We also strongly support expanding missing middle housing. Middle housing, some of you may remember, are smaller scale developments that add variety to neighborhoods and provide more attainable options for young families, seniors, and essential workers like our teachers and public safety officers, all without changing the character of communities. And none of this happens without people to build it. A national study from the Home Builders Association found that construction labor shortages reduced single-family home production by about 19,000 homes last year. Growing our skilled trade workforce will not only help close that gap, it will also create stable, high-wage jobs right here in Kentucky. It's also important to note that the investments in Northern Kentucky consistently produce an incredible return for the Commonwealth. Our region delivers strong job growth, high tax receipts, and economic momentum that benefit all of Kentucky. When we invest in housing and workforce initiatives in Northern Kentucky, the results ripple far beyond our 3 largest counties in Northern Kentucky. You're hearing a lot about this today. The work is all about partnerships. The Northern Kentucky Chamber is proud to collaborate with the Catalytic Fund, the Builders Association of Northern Kentucky Ad District, Brighton Center, and our local governments. And we deeply appreciate the leadership of our state legislature. So thank you very much for your efforts in that. You'll find the full Northern Kentucky Housing Blueprint in your meeting materials. Hopefully you've all had somewhat of an opportunity to take a look at that. I encourage you to take a closer look at the examples and the strategies outlined in it. Together, we can scale some of these ideas statewide to help secure Kentucky's long-term economic future. Thank you again for the opportunity to speak with you today and to share our work in this space. I'll now turn it over to my colleagues from the Catalytic Fund to talk about the Regional Housing Fund and, of course, Brian Miller with the building. Thank you.
Good afternoon, Co-Chairs Mills and Witten. It's an honor to be here in Frankfort today speaking in front of this Housing Task Force. Again, my name is Travis Geisegem with the Catalytic Fund in Northern Kentucky. The Catalytic Fund is a mission-driven company that provides investments and real estate services to revitalize local communities and drive economic development. We are certified by the United States Treasury as a Community Development Financial Institution, or CDFI, which is a national network that promotes economic growth, real estate development, business financing, and job creation. We are privately funded and locally controlled. Therefore, we can individually structure our investments to suit each project's needs. In response to that area development district study and subsequent Home for All menu of strategies, the Catalytic Fund developed a business plan for a housing fund in Northern Kentucky, which is that first point on that housing blueprint that you received. This task force is well aware of Kentucky's housing needs. In Northern Kentucky, we need 6,650 units over the next 5 years to support our economic development. And the state of Kentucky is at a deficit of 206,000 units across all price points. The Northern Kentucky Housing Fund is a production-oriented solution to that problem. The fund will make flexible, low-interest rate loans to produce new housing units via new construction and renovations. Loan rates will be individually structured based on each project's needs, and they will support both market rate and units with affordability requirements in Northern Kentucky. Our investments in housing will be made as secured loans rather than free money, and this creates a much more sustainable model and a stronger return on investment. Funds will be invested in projects that have strong fundamentals that create new housing units, are then repaid and then recycled back into new projects. And I have a little graphic up on the screen. I don't want to make a revolving fund any more complicated than it has to be. We have investor dollars, loans, they go into housing units, we get repayments, and then we repeat the process. While this plan calls for a new fund that is targeting at housing, I want to stress it's a continuation of work we are already doing at the Catalytic Fund in Northern Kentucky. Northern Kentucky does not need to create this new fund from scratch. The Catalytic Fund has the staff, qualifications, infrastructure, and established track record to manage this type of housing fund. Since 2013 at the Catalytic Fund, we have invested over $40 million in privately raised capital in over 100 real estate projects, creating over $450 million in real estate investment. And this has all been with $0 in lost capital. So that's an 11 times return on investment without any direct financial support from local or state sources. So this work has helped transform Northern Kentucky from a city that USA Today called America's Most Blighted City in 1983 to one that Money Magazine called one of the best places to live in the United States last year. Our initial needs for the housing fund are $5 million in lending capital with a goal of $25 million by the end of year 5. We think that $25 million in capital can support creation of 1,000 new income-aligned housing units in Northern Kentucky over the next 5 years. Our target sources are Community Reinvestment Act motivated bank loans, philanthropic grants, corporate support, contributions from our 3 Northern Kentucky counties. So far, we have received 2 commitments towards our initial $5 million goal, including one from Fifth Third Bank. Support from the Kentucky legislature for a locally controlled housing fund like ours will be critical. We hope the legislature will consider investment in production-oriented housing funds like ours in order to facilitate the creation of the income-aligned housing units Northern Kentucky needs to support our economic growth. That is all I have for you today, but I'd be happy to answer any questions after the conclusion of our presentation. Thank you.
Thanks again, chairs, folks of the committee, for having us out again today. My name is Brian Miller with the Building Industry Association of Northern Kentucky. We operate the Ensweller Building Institute. That's a standalone 501c3 education foundation that's been in front of the legislature multiple times, especially in the last few years, having to do with dual credit programming. According to the National Conference of State Legislators, high construction costs, including labor shortages, are among the key factors keeping home prices high and limited housing supply. A recent study quantifies that impact. Tammy had talked about 19,000 homes that were never constructed, but put that down to dollar terms, we're looking at a total investment across the country. Those homes not being built, that negative investment would be $10.8 billion annually. In short, without enough trained workers, we simply cannot build housing at the pace required to meet demand. If you remember, during last year's task force meetings, the Kentucky Housing Corporation noted that not only do we have a missing supply of homes, we have a missing supply of builders and tradespeople to build those homes. It was technically gutted during No Child Left Behind and the Great Recession. That workforce challenge we find ourselves in is directly relevant to our region's housing crisis. According to the Bureau of Labor Statistics, they indicate that the greater Cincinnati metropolitan area, the MSA that we find ourselves in, will need over 67,000 new construction workers in the next decade. That's just to simply keep up with growth and replace retirees, which are retiring in a massive wave. Yet today, about 78% of construction firms report difficulty filling those job positions. They cite workforce shortages as their number one biggest hurdle nationwide and locally. The result is delayed projects, higher costs. Research shows that shocks to the construction labor supply have drastic effects on housing output. For example, one study found that after an immigration enforcement-related labor shock, the typical U.S. county lost about a full year's worth of building growth. That averages about 633 fewer building permits issued, or 1,178 fewer homes built in 3 years. That's not a statement about immigration policy, but it is an indicator about how new homes are also directly tied to the labor market. New homes in those areas that were built cost about 16% more. That's roughly adding about another $50,000 per home. These dollar amounts are very important. If you look at our MSA, our National Association of Home Builders Economics Department does a 300-city survey across the country trying to tie down a priced out effect per $1,000 in each major metropolitan area. That study is supported by peer review of over 50 economists nationwide, and as a result, we find the science to be very, very sound. In the Northern Kentucky region, the metropolitan area we find ourselves in, for every $1,000 increase in a home, we find $1,200 families can no longer afford that home. So if you can do the math by having a labor shock in your market, that it would increase the price of a home on average by $50,000. That is a significant amount of families that can no longer afford those homes. The simple math of that is that only about 10% of those families that would be suited to purchase those homes will actually do so. Life changes, life cycles, wherever they're at, bad financing or bad credit report, they can't get financing. So the numbers become even larger. Put simply, housing supply has that direct tie to labor. And any serious effort to improve housing affordability has to invest in our workforce. The Institute itself is operated by the Association of Northern Kentucky. It's been around since 1967 in some form or fashion, and is a local construction trade school that enrolls hundreds of students annually. Roughly, we currently have 100 high school students enrolled in an introductory program and about 350 adults that come to visit us both in the afternoons and the evenings. In Northern Kentucky, it was mentioned by Tammy earlier, we don't tend to compete with one another. We tend to work together. The Institute articulates with Gateway Community and Technical College. We also have programs that we're now offering dual credit to high school students. We don't see our role as competing. We see our role as augmenting and enhancing what we currently have in order to build a better Northern Kentucky. The Institute's growth illustrates what industry-led workforce development can achieve. Historically based out in the Boone County area and recently expanded to Covington in 2024, supported by state, local, and private funds, The Institute's goal is to roughly deliver about 30% of the region's needed new construction workforce every year. That equates to over 2,200 new workers. And yes, Representative Klein's Campbell County is on our radar for our next location. The Institute model has proven successful so far by combining classroom instruction with a real-world apprentice-style experience. So in order to meet future needs, the questions for policymakers is how to facilitate more successes like the Institute, not only locally, but statewide. State legislatures can play a pivotal role in expanding the construction talent pipeline through funding, education policy reform, and regulatory improvements. There are successful examples in other states. For example, Alabama just recently passed House Bill 335 just this very year. This is a law designed to boost construction trades education programs. The legislative authorities, local governments collect small fees as a voluntary basis for cities and counties and direct those funds into a dedicated construction trade academy fund. That is overseen by the Home Builders Licensure Board in their state, and as of today, it has empowered its home builders associations to create and operate regional home builders academies with sustainable local funding. Those funds are collected locally and spent locally. They flow back to support those trade academies in the areas where the fees are raised, ensuring that those communities invest in their own future workforce. That model, using a modest fee or surcharge to fund those sorts of trainings, has gained support from industry and legislators alike as a way to create dedicated, stable funding streams for construction education. Early indicators show that they have very strong results, with new academies like the North Alabama Home Building Academy expanding free training for hundreds of students under this initiative. Kentucky could consider a similar approach. By statute, the legislature could enable the creation of a regional construction training fund. For example, any small fees, any other funding models, or transfer fees during real estate transactions could be a very important initiative in order to create such programs. Beyond funding, there are several practices that can employ to modernize education and regulatory environment for construction workforce training. We should streamline any overly burdensome regulations that make it difficult to establish and expand trade programs. For example, many trade instructors are experienced journeymen or master tradespeople who may not have a traditional teaching certificate. State education agencies can simplify the credentialing process to allow these experts to teach in high schools or community programs, perhaps through adjunct CTE instructor licenses. We understand that there's been some regulatory reform here recently. We don't feel that it goes far enough. If you are a master tradesperson in your trade, you should have the equivalency if you transition over to an education setting. Right now, you're going from a master tradesperson to a grade 3. It's a non-alignment. We can also strengthen high school to workforce pipelines, allowing construction pre-apprenticeship programs to count towards school credit on graduation requirements. I said we partner in Northern Kentucky. We have very good partners in the private industry that also do grades 6 through 8, particularly started in Campbell County, Representative Klein's. We partner with them, and we have all identified that there is a major gap in the freshman and sophomore years because of the overloading of electives during the high school experience. Math is math. Math in the field and construction is still math. These could be allowed for equivalencies in the junior and the freshman and sophomore years to create a true pathway from grade 6 through high school graduation into adult education. Kentucky's recent innovation has just not simply gone far enough, but we can also create a credit as a great example, breaking down silos between secondary education and vocational training. We can remove age restrictions where safe for youth to work on supervised job sites or internships. Is another way to give young people real experience. Many of these steps don't require usage of existing funds, just commitment to prioritizing and modernizing workforce development and education policy as part of the housing solution. So we talked a little bit about these increased costs. We estimate in Northern Kentucky, increased cost of a home has gone somewhere up between $15,000 to $20,000 per home just as a result of the decreased workforce in construction specifically. So what are the very specific things that legislators can do? We had just talked about establishing a dedicated training fund statewide that would decide where funds would flow locally with local decision makers, area development districts, other workforce boards. We could empower public-private academies such as the Institute and encourage state or local workforce grants to industry-led training academies through builders associations, community college, labor unions that have proven success in placing graduates. These partnerships leverage industry expertise and facilities and training. We can integrate trades into K through 12 education. We can streamline instructor certification and program approval that we just spoke of. We can reform apprenticeship initiatives. Currently, when we speak to our employer partners that run apprenticeship programs, the $2,000 tax credit doesn't mean a whole lot to a company that faces a mountain of paperwork every single day. They would rather not even fill out the paperwork to get the $2,000. They honestly ignore it. We are a intermediary for registered apprentices with the labor cabinet, and we hear it every single day. We'll fill out the paperwork for you and get you your $2,000. I'm not interested in this phone call. Have a nice day. So what we could see is a reform in that where the money would flow to the student to help pay for their trades education. We could also take a look at allocating workforce funds strategically. We can ensure that state's workforce development dollars are aligned with industries' high demand like construction. Currently, an outsized share of federal and state training funding goes to four-year colleges still, when we see this trend needed in the trades. We can promote accountability and local oversight. Area development districts and workforce boards can help decide where these funds go. We can also open Kentucky dual credit scholarships to proprietary schools such as the Institute. While we've taken the last 2 years to establish dual credit programming through the Department of Housing, Buildings, and Construction, the Department of Education still does not recognize our dual credit programs. So a student has to go in their full school day, come to us in the evening, and try to find a way to avoid sports and extracurricular activities. While that provides a setting for a very committed person, it does not create an easy pathway towards success. So recognizing dual credit programs in construction trades would also open up the opportunity for dual credit scholarships administered by KHEAA. So implementing these best practices, legislators can help build a robust construction workforce pipeline. As we stated before, housing affordability is at a crisis point. It's complex, but one thing is clear. We can't solve it without people to build those homes our communities need. And strengthening this construction workforce is a pro-growth, pro-housing strategy. It creates good-paying jobs and helps close the housing supply gap. We urge the task force to consider the workforce development ideas we've outlined today. With the right policies, we can cultivate the next generation of builders and tradespeople here in Kentucky that will not only improve housing affordability, but also provide lifelong career opportunities for our citizens. And with that, I think we can yield for any questions or comments.
Just a couple of questions, and then Representative Whitten has, Co-Chair Whitten has some questions as well. To go back on the trades education, since we just finished up with you, how do we, if we invest in trades, how do we make sure that those folks stay in Kentucky, have successful jobs, and that investment goes toward building housing units in our state? Particularly, we are a border, we are a border state.
Right.
Where you guys are at, where I'm at, sometimes the draw is more toward Cincinnati or toward Evansville than it is, you get an education and they got more work there. How do we do that?
I guess we can go back to state what Dr. Dietz, our chief economist at the National Association of Home Builders, will tell you, is that the communities in the United States that figure out the key to solve this housing crisis are going to be the economic development winners in the future. If we're able to build more housing, it will just naturally stand to reason that people will have more of a chance to stay here. One of the reasons that we take on this endeavor, and we have to go to battle with NIMBYs, and they don't truly understand, is that if we don't build anything else, your children will move someplace else, including tradespeople.
Yeah.
If the jobs are not here, your children and your grandchildren will not stay here. I guess it'll be good news that CVGA's got pretty low fares because I'll have to fly out of town in order to go see my grandkids. But if we're able to create a healthy housing environment that is more, that is less regulated and more affordable, we're going to naturally see more job growth, and those jobs will have a tendency to stay here. One trick we have a workaround with, it's a special situation between Ohio and Kentucky, is that we got a workers' comp problem. Workers' comp in the state of Ohio is a monopolistic system set up by state government. It's very cheap. Workers' comp in Kentucky is exacerbated by the coal industry issues. Not only that, but there's been a series of claims over the years. Workers' comp coverage to an injured worker in Kentucky is very, very good. So an employer in Ohio has a sense of heartburn about coming across the river and paying extra money to do business here. That's not a solution that the legislature can fix. We believe it's a deal between the governors of both states. So that's a natural issue. But we think that, I guess you go back to Field of Dreams, if you build it, they will come. But also, if you have a better economy here, your children and your grandchildren, those workers have a better chance of staying.
Yeah. Well, we have tried to approach workers' comp a couple times, so we may try it again in the future. My final question is for the Catalytic Fund. Congratulations on your work that you've done. Do you have an approximate of that $450 million that's gone into housing units? How many units was that approximately?
Yeah, since 2000. Oh, let me turn
Is
on
that
the
in there
microphone
somewhere?
here.
I don't know if I've missed that or not.
No, it's not in here. But since 2013, we facilitated creation of about 3,300 housing units.
Okay, good.
We're not just focused on housing now. That's a small piece, which is why we want to capitalize this second fund to hone in on housing.
Okay, very good. Co-Chair Whitten.
Thank you, Co-Chair Mills. Thank you all for the presentation. Really informative, and I appreciate the housing blueprint. That's really great. I do have a comment or a question about the workforce development. That's something that we've always identified as being a challenge, but could never really put our arms around exactly, how to fix it. And I appreciate kind of the robust list of possible solutions. Is that in the blueprint? Are the suggestions that you just went through, is that part of this, or is there a way that we can?
They are not articulated in the blueprint, but I'll be happy to forward them. They will also be coming out of our association with other partners as part of our statewide legislative priorities as we head into the session. We'll be approving those by our board of directors at the end of this month.
If we could get those recommendations in writing, that would be greatly appreciated.
Be happy to provide those.
Thank you.
Yeah, if you can forward them to our staff or to Chris, and he'll get them to all the members of the committee. Any other questions? All righty. Looks like you guys did a great
you very
job.
much.
Thank you so much
Appreciate
for
it.
being here.
Thank you.
All right, next up is Representative Michael Sarge Pollock, Senator Jimmy Higdon, to talk about religious institution land uses. We already started the clock before y'all sit down. No, I'm just kidding. Thank y'all for being here today. I know you got a nice little bill here, simple little bill for you guys to work on.
Thank you, Mr. Chairman. Jimmy Higdon, Kentucky State Senate.
Sarge Pollock, State Representative, District 51.
He's the brain trust of this bill. We started in the Senate last year and passed it out of the Senate with ease. It was well accepted and got to the House, and I won't say that it had a lot of opposition, but a lot of questions. So Representative Pollock will start it in the House this time and hopefully get it back to the Senate. This is a great bill to add some other things on that are detriments or I guess stopping points for development of affordable housing. This bill came to us. Sarge and I were invited to by the Sisters of Loretta for lunch one day at Turkey and Dressing, I believe. If I'm
Very
not,
good.
It was,
Very
and
good.
about a year ago. And Sister Joy and Sister Mary had seen a piece of legislation filed in the U.S. Senate, and then in California and other states. I think Colorado, California, Arizona, Texas, Massachusetts have all had versions of this bill proposed. And it was originally named, In God's Backyard. I guess a play on words for those folks that not in my backyard, but in God's backyard, which allowed religious institutions to kind of bypass local zoning laws and build affordable housing on church property. Now, when you say they bypass the zoning laws, there's a lot of zoning laws that are restrictive, especially when it comes to affordable housing or smaller houses, square footage, parking, lot size, single family, multifamily, there's just a lot of zoning restrictions when it comes to building. This bill simply lets them bypass most of those, still had to follow building codes. And in the final phase of it, before it can be built, it has to be approved by the local governing body. And like I said, the property has to be owned by a religious institution and built for affordable housing.
Senator Higdon, excellent job of explaining our bill.
It's a simple little bill.
It really is. And so when it came over to the House, the terms in the bill was a little bit more broad than we had wanted it to be. So obviously, being a short session that we had last year, we just kind of ran out of a little time. So we're going to bring this back this upcoming session. We're going to tweak it a little bit and bring the zoning property areas. Initially, I think there was commercial, there was residential, there was agricultural. So we're going to kind of really target those commercial zoned properties. And so in doing that, we feel like in talking to others that it makes sense in doing that. Also, Senator Higdon in the original bill, I think, again, this is targeting our church families, our churches who are wanting to step out there and provide a housing, or short-term housing, and those type of things, whether it's in an existing facility that they have, which that's where the Sisters of the Loretta had, and took advantage of that property and redid that. So that's the intent of this bill, and we're here today just to ask for this task force to endorse our bill as this upcoming session.
Thank you for this. I'm a big supporter of it. Can't wait to see it in the House again. Are you still keeping the density for units the same? I think it's up to 25 or something.
Yeah,
like
I think it's up 24, 25. Yeah, that as of right now seemed like it wasn't not a big deal on that part of it. So those type of limits, 12 units were mentioned as well too. Mm-hmm. So we're still kind of tweaking it a little bit. Mm-hmm. But I know last year, like I shared with you, us narrowing it down to the commercial zone property was the big part of us getting this finished.
If I can, just Mr. Chair, just an echo of support for this. I've heard from religious institutions in my district and all throughout Jefferson County that are huge fans of this. I think it makes a lot of sense, and I'm happy to see it come across the finish line.
Thank you.
Co-Chair Whitten.
Thank you, Co-Chair Mills. Thank you all for this bill. I know it's you've been working hard on this for a couple years. I did just have a question. I know that you have to be a religious institution. You have to own the property. If you build residential and then the religious, they want to sell the property, would that then change? Would it go back to? I'm just curious how that would work if the property at some point sold to a non-religious.
I think that was a lot of the discussion that happened in the House, and I'm sure Representative Pollack has got all the answers, and we'll work that out as soon as he introduces it in the House. So we look forward to his how he resolves that.
Thank you.
All right, sounds like you got a little work to do. Any final comments, gentlemen? Okay. Well, thank y'all for telling us about your bill, and we will definitely take that into consideration.
Thank you, Mr. Chairman.
Make its way through the House and the Senate.
Thank you, sir.
All right. Our final item is Representative Richard White's on the agenda, as well as our folks from Americans for Prosperity. So. And we've got about 20 or 25 minutes, so we try not to make these meetings into a marathon, but they tend to stretch out a little bit. If y'all can introduce yourselves, and the floor is yours.
Chair Mills, Chair Whitten, good afternoon, and members of the Housing Task Force. My name is Michael Frazier, and I'm here representing Americans for Prosperity with my colleague Liam Gallagher, and we're so fortunate to be here with Representative Richard White. So I want to start us off with why we're here and kind of give the people and the face value up to the why. In one of my most emotional journeys in life, I spent nights on Kentucky's college campuses, not as a guest speaker, but in my capacity as executive director of the Kentucky Student Rights Coalition. And this purpose was to meet students who do not have homes. These are students who are sleeping on couches, trying to figure out where they're going to live nearby after they graduate, and trying to look at the affordability issues. I've met young people who shower in gym locker rooms, beg classmates for meal swipes, and sleep in libraries praying not to be found. I've seen where they park their cars behind stadiums in the shadows of new dorms they'll never be able to afford, and trying to figure out how they're going to get by from next to next. But homelessness doesn't end at the edge of the college campus. It's everywhere. And the housing crisis fuels this. Not long ago, and as most of you all know, a friend, a dear colleague who's with me today, Dr. Rafif Ali, who's a faculty at KSU here in his personal capacity, we came together to run a homeless shelter in Madison County. And not too long ago, this time last year, a sheriff from Madison County pulled up to our shelter, Madison Home, and in the back seat was a 65-year-old woman trying to understand why her low-income apartment was being condemned and trembling. She had intellectual disabilities, she had SSI, but on limited income. The sheriff told me, either you take her or I drop her off in the woods off Boonesboro Road. Of course we took her. Because what kind of society leaves a senior citizen in the woods? The moment showed me how broken our housing system has become, where law enforcement had to choose between compassion and abandonment. But it's not just strangers, it's personal. Most of you all know about the incident where my father's trailer burned down. My father's on limited income, doesn't know how to read, and frankly is at the age of where he can't start a new career. My father is technically homeless. My parents have been trying to find housing in Powell County, home to the poorest city in Kentucky, where the average income is $22,000. The average rent for a one-room efficiency apartment there in Powell County, usually the average is $740. Over the past 2 years, it's become $930 a month. Nearly $1,000 in a county where jobs are scarce and wages are stagnant. This is what poverty looks like today in Kentucky. It's not just tents under a bridge, it's seniors, it's families, it's working people, and it's students trying to figure out what's next. And if we talk about workforce investment, especially with students, that's one reason why they're driving out of Kentucky. Working people priced out of the most basic human need, a place to call home. We need change, but not more bureaucracy, not more red tape, and not more one-size-fit-all programs that fail the very people they're meant to serve. We need free market solutions that make it easier to build, to renovate, and to create more accessible places to live in Kentucky for every Kentuckian. Zoning restrictions, permitting barriers, and excessive regulations have choked the supply of housing for too long. The market can work if we let it. And as you have heard from earlier testimony, we certainly need to let the market come in. And that's why I'm proud to stand with partners who share this vision, people who believe in freedom, opportunity, and community-driven reform. So now I'd like to turn it over here to my colleague, Liam Gallagher, who will talk about some of these solutions and some of our proposals. Thank you.
Well, thank you all for the opportunity to speak with you today. I want to begin acknowledging the powerful testimony that came before mine. The stories you heard of students sleeping in cars, seniors left with nowhere to go, and families priced out of even the most modest homes are not just anecdotes. They're a reflection of a housing system that's failing too many Kentuckians. These stories remind us that this is not just a policy issue, it's a human one. And they underscore why your work and the work of this task force is so important. My name is Liam Gallagher. I serve as the Legislative Director for Americans for Prosperity Kentucky. At AFP Kentucky, we believe that every Kentuckian deserves the opportunity to live in a home that meets their needs in a community of their choosing at a price they can afford. And I'll be honest, I have a personal stake in this issue too. I'm a recent college graduate, and like a growing number of young adults, I still live at home. So yes, I care about housing policy because I'd like to someday be able to afford a place of my own. Maybe give my mother her living room back before she kicks me out for not cleaning up after myself. The median age of a first-time home buyer in the United States is now 38. It's the oldest that it's ever been. It's not just a statistic, it's a signal that something is deeply broken. Many young adults are forced to rent, and as rent prices increase, the amount of money they're able to put into savings diminishes, putting home ownership further and further out of reach. One vital aspect of the American dream is home ownership. It's not for everyone, but for those that want it, they should be able to attain it. The ability to grow equity in a home is how many families here in Kentucky and across the nation build wealth for future generations. Homeownership allows people the ability and stability in their everyday lives. This is why when homes are affordable, we see higher birth rates and more people starting families. This is not just a supply issue, it's a policy issue. Government barriers at both the state and local level have gotten in the way of people being able to buy a home. And that's where this task force can make a real difference. At Americans for Prosperity Kentucky, we believe in bottom-up, community-driven solutions that remove barriers and empower people. Today, I want to share 4 specific policy recommendations that we believe can help unlock housing opportunity, reduce cost, and protect property rights across the Commonwealth. First, we urge the task force to support the Permitting Approval Timeliness Act, which would establish a shot clock for local governments to process housing permit applications. Right now, developers and builders often face long, unpredictable delays that drive up costs and discourage investment. Some studies have shown that for each month of delay for permitting, the price of a home can increase as much as $4,400. In Washington State, their Center for Housing Studies estimated that delays lead to an average of a $30,000 increase in home price. These delays can derail financing, inflate construction cost, and ultimately make housing more expensive for everyone. By requiring local governments to act within a specific time frame, say 60 or 90 days, we can bring greater certainty and efficiency to the process. This doesn't mean cutting corners. It means setting clear expectations and holding agencies accountable. Time is money, and predictability is essential to getting homes built. Second, we recommend the adoption of a by-right Housing Development Act. Under current law, even projects that fully comply with zoning and land use regulations can be subjected to lengthy discretionary reviews, public hearings, and political opposition. This adds unnecessary time, cost, and risk to development. By-right development would allow projects that meet existing rules to be approved administratively without additional red tape. This reform would apply to a range of housing types from single-family homes to duplexes, townhomes, and even accessory dwelling units. It would preserve local control over zoning designations while streamlining the approval process for projects that already fit within those designations. The result is more housing, built faster, and at a lower cost. Third, we support legislation to limit frivolous third-party challenges to housing permits. Too often, lawful projects are delayed or blocked by lawsuits from individuals who have no direct stake in the development. These lawsuits can drag on for months or even years, adding legal cost and uncertainty that deter investment. We propose limiting the legal standing in these cases to directly adjacent property owners who can demonstrate clear and convincing evidence of material harm. This approach strikes a balance. It protects legitimate concerns while preventing abuse of the judicial process. It ensures that housing decisions are made based on facts and fairness, not fear or obstructionism. Finally, we recommend updating Kentucky's building code to allow for greater flexibility and innovation. While safety must always be a priority, overly rigid or outdated building codes get in the way of affordable housing. States like North Carolina have already modernized their codes. Last session, they passed House Bill 488, which expanded the types of properties that could be built under their less stringent residential code, and Kentucky should follow suit. A more flexible code can unlock housing and innovation, and it will make it easier to build homes that meet the needs of today's families. At Americans for Prosperity Kentucky, we believe that housing policy should empower individuals and not entrench bureaucracy. We support free market solutions that allow people to live where they choose, afford homes that meet their needs, and pursue better lives without unnecessary government interference. When housing is too expensive or too scarce, it limits mobility, stifles entrepreneurship, and undermines economic growth. But when we remove barriers and embrace innovation, we can create a commonwealth where more people can thrive. The stories you heard earlier are heartbreaking, but they're also a call to action. We cannot afford to let red tape, outdated regulations, or fear of change stand in the way of progress. By embracing the reforms I've outlined today, we can ensure that government regulations do not stand in the way of Kentuckians trying to build better lives. We stand ready to work alongside this task force in the General Assembly to advance policies that protect property rights, promote affordability, and strengthen communities across the Commonwealth. Thank you again for your time, your leadership, and your commitment to the people of Kentucky. Now I'd like to turn it over to my friend, State Representative Richard White.
Thank you, Lehman. Thank you for the committee. I'm Richard White, representative of the 99th District in Kentucky, and I want to bring up some issues that I was not aware of until the last 4 or 5 weeks in my area, and I think it's important to bring this to y'all's attention. And I'm going to read some comments from some constituents in my area and what their thoughts of when they're dealing with some inspectors that they, while they're building a new home or a place. And they pointed out some issues they thought would help the process, and I'd like to go over some of them. One of them was saying electrical inspections, you have to have a list of names to choose from. And only certain people cover certain counties. And once the inspector comes to inspect your property, you no longer have the right to get a second opinion. That inspector gains jurisdiction over your property. So what they say goes. So if you want to verify and get a second opinion, you can't. And they wish there was a requirement for all inspectors to cite the code ordinance, the KAR, the KRS, to which they are relying on when they find deficiencies. I've asked that information from my inspector twice and never got any response. Actually, after he failed the plumbing inspection, he never answered another email or call from myself or my husband, even despite leaving a note for us to call to discuss the deficiencies. We've never gotten a written confirmation that the plumbing or electricity passed inspection. It was all verbal. Without written confirmation, that would be really hard hill to climb for property owners in the state wanted to say that they are in violation when they really aren't. We've gotten written failures from the plumbing inspectors, but never confirmation that everything passed. One of them said we paid $1,000 for a water meter, waited 2 weeks before it was installed. Electricity is the same waiting period. We also had to get a septic system installed and inspected before we were allowed to have water meter installed. But we had to have water in the septic tank before it could be passed. How does that make sense? And I've heard stories that some of these people, we have contractors in surrounding counties that's commented to me that they refuse to put a water line in Rowan County because of the inspectors. And some that says when they do price a job in Rowan County, they'll go as high as doubling the price to install, just knowing they have to deal with certain inspectors in that area. A lot of them, well, I've had 2 or 3 that said that they got a septic tank permit from the health department. They had it installed. They came out and inspected it and said it looked fine. You can cover it up. The water inspector comes by, says you've covered up the septic tank and the lines. You have to uncover it for me to see it. And things like that, it's not common sense. One of them had hit solid rock digging their water line ditch, and they hired ram holes and so forth to try to get depth, and they could only get maybe 28 inches deep. Well, they failed it on that spec because, and the common sense says all they had to do was add more dirt on top instead of, little simple things like that. We had a new Mr. Gaddy's built there in Moorhead, and all inspections were passed. They was going to get their occupancy certificate to open and had their plans too, and they wouldn't pass the final inspection only because the toilet paper holder was only 1 to 2 inches off the height. They need to have some common sense situation like that where they could say, well, we'll go ahead and give you the permit to open, but we'll give you 2 weeks to get your toilet paper holder right. There are several people that will not even touch around county. We have a owner that has quite a few rental properties in our county and surrounding counties, and she told me, and she runs first-class operations, but she says she's not going to do any more construction around county or expand for any more housing because having to deal with the inspectors. She's going to wait till things change. And I just want to bring some of these issues. I think it's and I don't think that's a statewide problem. I think there's just certain areas or certain inspectors that get the God complex in them. They think they're above everybody else instead of trying to work with the public. And the public's the one that's paying their salary. I think they ought to be a little more humble and try to help and assist people trying to improve their area or build a new home and so forth. And I think it's definitely a problem in certain areas of our state. And thank you all.
I agree. We've heard some of those comments, similar comments, over the last couple of years, and that's why you remember Governor Bevin had the scissors cutting the red tape. I mean, that kind of goes right along with that as well. We've got to be business friendly, and I will comment and say that the city of Henderson, in where I'm from, we've worked over the last 10 years to try to improve our reputation on codes, inspections, and being welcoming to new businesses and when they build. And it's still tough to overcome that. And I still hear people say, "Well, it's just tough to do business in Henderson." So there's a little bit of weighing there. But from a government standpoint, we need to do everything we can to help people, put steel and metal and wood in the ground, concrete in the ground for homes and housing and business development. Co-Chair Whitney, you have a comment?
I just want to say thank you all for the presentation. We heard some of these similar ideas even earlier in the presentation from the Lexington folks. So I appreciate this. I look forward to kind of seeing those ideas fleshed out in legislation. And Michael, I did want to. I think a lot of times when we think about housing crises, we don't really think about the college community. And so I just wanted to, since you're on the campuses a lot, just quickly, kind of, do you see a big impact in kind of a group of Kentuckians that a lot of times we don't think about that is really being hurt in this homeless crisis?
We do, and there's a few things to note, especially when we count the legal definition of homelessness, the K-count definition. It's very under-inclusive because it doesn't actually include those who are sleeping on couches. It doesn't include who are actually homeless but technically have some sort of temporary residency. Additionally, it doesn't incur those transitional in living, so going from dorm to finding a new place, exactly what Mr. Gallagher said earlier. I will also say that when it comes to the housing crisis, I think that college students particularly have been underserved. But when you look at programs like at the University of Kentucky, also EKU, they are trying. It's been a national problem regarding homeless students on campus since 2015. They have tried to step up, but I think that one part that's been in the discussions, that sweet spot of going from in college and then also out of college in the college discussion. One way is to do that is, of course, update the K-count definition so we can have that true count, but also incentivize the universities, particularly through performance funding, perhaps, which, of course, they do have a square space metric. A lot of these universities have, in my opinion, probably abused that by doing multi-purpose dorm spaces that counts towards it instead of actually getting to the true root of the problem. So that's the reason why we keep on seeing these opulent dorms with Tempur-Pedic mattresses instead of affordable dorms in some of these campuses which have empty buildings that they could transition. But looking at that, going from that transitional place and also transitional shelters, I think that that's an important point in the conversation that needs to be had as well, because as Dr. Ali will tell you, and from Madison Home and me, is that, there's a misunderstanding of what homelessness means. They're not on drugs. Some of them are. A lot of them are poor. Out of the 100 people that the 100 people that usually stay in the shelter, probably about 50% of them have 2 jobs. They just can't afford rent. and they work hard. They're great workers. They're not on drugs. These are single families, and these are young single families that are trying to do. And this is where the policies that Mr. Gallagher, and then also we told the tale of how to fix it. We wanted Representative White to be here to show the detail of how this is implemented. We got to get this out of the way, especially for our young people, especially graduated students and in Kentucky's post-secondary education. Thank you, ma'am.
I'd like to add that some of these recommendations on issues spoke about, I'm going to leave a copy here if y'all would like to get one.
We'll let Chris pick it up, and he can get a copy out to us, all the members of the committee. Well, very good. Thank you so much, guys, for your testimony. And I would just make a closing comment that if you felt like, I know we have audience and people are watching on the film too, if you'd like to shoot Representative Whitten and I an email to kind of summarize your position on housing, that would be great to have something that helps us summarize where all the groups are at. We've had so much presented. Chris's job is to put all of this and start putting arms around it, and we're going to produce a document that we'll approve next month, hopefully. So, and by the way, that meeting is this correct?
Different date. Yeah.
Is that correct?
Yes,
Yet?
that is.
Okay, so it is different. It's November 24th at 1 p.m. here is our date. So then we'll have a turkey dinner after that. So. Representative Co-Chair Whitten, do you have any other comments?
I don't. I appreciate it's a really great meeting today.
Very good. Well, thank you, folks, for staying all the way through our hour and a half meeting. If there's no further action, we'll stand adjourned. Thank you.